All right, let me go ahead and introduce myself. If you don't know me, I'm Marissa. I was going to say Nevis, but it's Gonzalez now. I just changed my name because I got married last month. Yay. Um, so I'm so weird during that transition to introduce yourself as someone new when you've been for 38 years, Marissa Nevis, this entire time, right? So, anyways, Marissa Gonzalez, I'm really excited to be here to teach and educate you on this amazing opportunity. This program is fantastic. I'm super excited to have partnered with HomeLight. I'm going to introduce Sam in a second, and he's going to let you know exactly who he is. And he's really going to be the one diving into HomeLight's portion of this because this is a program. It's a program that is going to allow you, a buyer or agent, the opportunity to purchase a home before you sell your home. Not only that, you're going to have the opportunity to borrow against your loan, your current home you're selling for the down payment on your new home with a 0% interest rate. And so we're going to dive all into that. Sam, he is in charge. He's head of lender relations. So the ins and outs of this program, he's really going to go in and talk about exactly how HomeLight has partnered with us and what we do together. So as far as my end, this is just, you're going to be able to qualify for a new mortgage, purchasing a home, regular conventional loan. They offer jumbo now and high balance, which is fantastic. So Sam, go ahead, take it away, introduce yourself, and let's dive into this program and exactly how it works.
Thank you, Maritza. I appreciate it. It's nice to be here. Thanks for having me. Education on this product's everything. So thanks for joining me. Um, I'm Sam Ghannam, technically head of lender relations at HomeLight. We provide this product to our partners, in this case, Marissa, to essentially help contingent buyers, right? Help grow the amount of products that lenders and agents can use to support buyers who need a solution to move into their new home, whether it's cash offers or buy before you sell. We're here to hopefully grow the industry and change the way business is done in a simple, certain, and satisfying manner. So thanks for joining. Buy before you sell. JC, we're good for the next slide. So what we have is a modern bridge solution, right? We want to help contingent clients. As we know, it is very common for a home buyer in this market to need to do something with their current residence before they move into their new mortgage or before they move into their new home. So buy before you sell theoretically helps solve these issues that arise when a client needs to remove their contingency or improve their debt to income ratio, or in layman's terms, really do something with your current residence before you move into your new home. So we kind of have three major solutions that we're solving for. One, JC, feel free to jump to the next one, please. And I think real estate agents like this the best. We are going to remove the pending sale contingency on their offer before they even submit. So competitiveness, save money. That's our goal here, is to help find solutions, right? And so as long as your client's going through buy before you sell, we can remove the pending sale contingency before they even submit an offer, helping them win their next home, and at the same time helping them save a little bit of money, right? And Marissa now has the ability to remove their departing resident's mortgage liability directly from the debt to income ratio. So everyone's kind of heard this term, debt to income ratio. Everyone's kind of familiar with the reasons clients are contingent or the reasons clients have to submit contingent offers. The biggest benefits behind our products are we're a contingency buster, and now we can release that departing resident's mortgage liability completely. So Marissa essentially would be able to offset that mortgage liability, freeing up their debt to income ratio. And then to kind of wrap up the big propositions behind the program in general, we provide a 0% bridge loan to help your clients with the down payment on their new home. So as long as they have enough equity in their current residence, our kind of big shtick is we provide a 0% bridge loan up to about 75% of the value of their current residence, right, to help them move into their new home. So again, the big three are kind of contingency buster, release the liability, and then use the money from your current residence rather than your 401k or Uncle Joe or whoever to move into their next home. I
And
think
I
Marissa.
cannot, yes, this is the most exciting part for me, because if you don't know what a bridge loan, normally when you qualify for a bridge loan, it's like a home equity line of credit. You have to qualify for both of the mortgage payments. Well, utilizing the buy before you sell program, we do not need to do that. So it frees up your debt to income ratio and allows the opportunity to be able to utilize the equity in your home now before you actually sell your home. And that's just unheard of. So, and it's completely safe. There's really not a risk in doing this because HomeLight's going to go in and they are going to buy your home for you as a backup offer. And we're going to dive into that next. So, JC, let's talk about that on the next slide so we can get into the more intricate details of it.
First, let's kind of just jump into who we are, how are we, what is Sam doing on this webinar realistically. So we're a third party lender, right? So it's a modern concept where we're supplying products, but we don't work with the clients directly. Marissa and the agent work directly with the client. So we're supplying Marissa realistically with an excellent mortgage solution. And so she would operate as the quarterback behind this transaction. That's kind of the easiest way to put it, along with the agent as well, right? But the big deal here is your deal, your clients, and we take the risk on the backside. This third party lending concept, or this concierge lending concept, is relatively new to the industry. But over the last couple of years, you've probably seen a few other companies doing something similar. And we're happy to kind of be on the rise here and join the crowd and provide a real product that's making a difference in the industry. But as we kind of go deeper and deeper into the program, you'll see the true benefits. And JC, if you could jump to the next one for us, we'll run through a sample transaction. So we've kind of talked about the propositions. We've talked about who is Sam and who is HomeLight and how are they related here. And then how is Marissa here or Marissa taking over as the chief of this product realistically. She's become a product expert. And so let's run down how a transaction works and that backup offer she mentioned. So first thing we're going to do is get the departing residence approved. Really simple, right? Expected sale price, mortgage balance. We tell your customer the equity unlock. That's our 0% bridge loan. Our loan payoff value is our backup offer that we talked about. The backup offer is what removes the contingency and offsets the liability, right? So boom, your client's approved in 24 hours. They go and shop contingency free. So real estate agents know how important this is, even in today's market, to submit a contingency free offer, right? So your clients now have the confidence to submit a contingency free offer with a 0% bridge loan in their back pocket. Really cool stuff. They go under contract on their next offer, hopefully. They close on their new mortgage or their new home, right? For example, the new mortgage is 600K, or excuse me, the new purchase is 600K. They use the entirety of the equity unlock. That's their 0% bridge loan. And their new mortgage is $475,000. Important to note, many clients recast the loan post-sale to improve their monthly payment. That's all PITI really is, their monthly payment, how much they expect to pay the mortgage company every month. And
And a lot
then
of
they
people don't understand what that means, though, Sam, recasting your loan. So, you have that, you're only getting $125,000 based off this scenario that we have here, but there's still equity in your home that is being sold. And as soon as that's sold, the rest of that you can take and you can put down and recast your mortgage. Your loan amount's going to go down. So your payment's going to get better.
Mhm. Yeah, so some people hit the lottery and put 200K towards their mortgage, right? And then some people use buy before you sell their home later, and then put that money directly towards their mortgage. Even though they've already kind of signed paperwork, moved into their new mortgage, moved into their new home. Many loan companies, Marissa included, allow you to recast or put more money in or a lump sum of money in to improve essentially your monthly payment. So then you sell your home at full market value, right? So
Right.
really all the benefits of selling your home before you even need to list it, right? So here we are. We got approval for the product. We shopped contingency free. We closed on a new mortgage. And then you sell your home that was previously holding you up, right? You don't pay us that 2.4% program fee until you sell your home. It's important to know. And kind of one of the biggest questions we get is, what happens if we can't sell it? Well, that's the only time our loan payoff value or our backup offer actually comes into play. And I would like to emphasize, we are not in the business of buying homes, right? We want you to sell your home in that 90-day program period, or at least go under contract in that 90-day program period. But we needed that loan payoff value or that guaranteed backup offer to remove the contingency earlier in the stage and offset that um, current resident's mortgage liability earlier in the stage. So we do eventually have to buy the home if we have to. We try not to, we don't like to, and we've actually only had to buy one out of hundreds of these transactions. I think there's many agents on this call, and they can confirm it's pretty easy to sell a home in 90 days. Or if everything's priced accurately and the market's going smoothly, it's pretty easy to sell in 90 days. But if you can't, we have our upside protection program. We purchase the home with our loan payoff value, which also sits at that about 75% number, and then we sell the home ourselves. We don't take that extra money. Our upside protection says the client receives the extra funds after we sell it. Again, we've only had to do this once, and we're not in the business of buying homes. This is our backup guarantee. So if we have to purchase the home, we resell it, full market value, hopefully, client receives the extra funds, and the listing agent stays on as the listing agent. Really important to know. That's kind of what makes it a backup offer. And again, the backup offer is just designed to remove the contingency and offset the liability. And it's a backup offer because we have the upside protection and the listing agent even stays on as the listing agent.
And Sam, I want to add to that because most clients, I mean, when a client wants to sell their home, a lot of the time they feel rushed accept the first offer that comes in because they're in escrow on the home that they really, really like, and they don't want to lose out on that. You don't have to rush this process because you have that buyer protection right there because HomeLight they're going to buy that house after the 90 days. And how that works, guys, is so say you find a home, I've pre-qualified you. So say you find a home that you like, you want to purchase the home, we go through escrow. The house can be listed already, right? You can list your departing residence already. We go through escrow. From the time that we close your loan within 10 days, that's when that property has to be listed, right? So you have all of our escrow period. You have 90 days before HomeLight even steps in, and we've already closed on your other home. So that is a really huge benefit of utilizing this program is you don't have to feel rushed to take the first offer to come in because you wrote a contingent offer, right? Huge selling point on this program.
I love that, Marissa. Yeah, so I just broke down my entire program in like 3 minutes, right? But
Uh-huh.
realistically, you have 4 to 5 months to sell this house. So if you list it the day you kind of get signed up with us, and then you go under contract, that's 30 days. Realistically, you have 4 or 5 months to sell this home. So while it seems like it can be pressed, and it seems like 90 days is short, 4 to 5 months is almost half a year. So
Right.
kind of sit on that, think about that. We try not to rush people. We give you the time to sell it, but we did tell the government we would buy this home eventually, and we don't want to
That's why
go
we
the
have
wrong
to stay
way.
compliant, right? And so, when you think about it, 2.4% fee, it's a commission. What you guys are doing is risky for your business. And so, it makes sense to do, especially if you're able to wait it out and not take lower. Most of my clients that write a contingent offer, a lot of the time, they're just taking the first one that comes in because they don't want to lose out on their other home. And so this is really an opportunity at a time where our market is the way that it is right now, right? There's not a lot of inventory. So, the interest rates are a little bit higher. Good thing on this program, rates are not inflated. Actually, our interest rates for my lenders that I'm utilizing this program through are about half a point lower than the standard and a whole point lower than a bank. or a direct lender, which is fantastic because they don't have all those overheads. So the interest rates are very, very competitive on this program. Okay, so it's really exciting to be able to see it progress and to see how our clients are able to qualify for this and not have to feel so rushed, right? Okay, let's move on to the next one.
So as I mentioned, 24-hour turn times for approval. We want clients to know all the numbers they need to know as soon as possible, right? So all we ask is a questionnaire from Marissa and then a property questionnaire from the agent partner, as well as property photos. Majority of the time we can find photos online, either from a 2020 listing or it's currently listed and we can pull it in. But this is all we need to tell you everything you need to know, right? We're going to give you the equity unlock amount. We're going to give you the backup offer amount. We're going to say on a Thursday, hey, we have this customer in a pickle. They need a solution. They want to put an offer in by Saturday. By Friday, that customer is theoretically walking around with the confidence of knowing, one, they have access to the equity in their home to use as a down payment. So boom, there's that 20% down that they've been worried about. And two, that pending sale is removed. So one, they're going to make they're going to make a more competitive offer, hopefully saving them more money at the same time with the confidence that they have the money to put down on that new home. So really important stuff. We really want to give your clients access to these numbers as fast as possible. Give you, Marissa, and give the agent access to these numbers as fast as possible, so everyone knows what's going on.
And
The
that's
best
all the
part
work
is,
that I'm doing. Yeah, that's all the work that I'm doing, and I'm working with you, the real estate agent. So when we do our home ownership strategy for my clients, we're going to get your application, we're going to get all of your income documentation, all your credit documentation. I'm going to run credit. I'm going to do your full approval based on utilizing this program. So once I get your application, I submit my loan officer questionnaire and I go, Sam, how much am I going to be able to get from my equity lock to put down for my client's new loan? Sam is then we're going to get the property questionnaire and those 10 photos. And how are you exactly determining that amount, Sam?
we actually use the agent's valuation. I mean, who else is doing
That,
that, right? The majority of the time, we can actually use the agent's valuation of the home. We don't want to tell the agent, never mind the client, what their home is worth. Why would we know best, right? But we do
right.
take a look at it. We do some background homework, of course, make sure everything's in line. But we use the agent's valuation. Really important stuff.
So take really good pictures. Do you need a home inspection or an appraisal or anything like that, Sam?
Not up front, not up front. So we go ahead and get this approved, and then you don't need an inspection until you go under contract. So
Awesome.
you're not going to have people stomping around your house, hoping to do an inspection on a Friday afternoon when you're trying to get the kids home from school and just enjoy your day. We really don't want to do that. So we wait for most of our documentation, and we wait for inspection until the client goes under contract on their new home.
Awesome. Awesome. Okay, what's next?
I haven't touched on this yet, and it kind of goes in line with what we just talked about. We can now approve clients for up to a $2 million bridge loan at that 0% interest rate, right? So these are our
Wow.
program guidelines. Really cool stuff. 0% interest, $2 million bridge loan. If they have enough equity in it, obviously we're not going to do it for the wrong house. But
Right.
we try to keep things as quick and as easy as possible. We're trying to change industry standards, right? The property currently needs to be in Colorado, California, Arizona, Oregon, Washington, Florida, Georgia, Texas. We are trying to go nationwide as fast as possible, but bear with us. For the majority of our guidelines, they're in line with kind of industry standards, except we do need to go into a conventional high balance or a jumbo loan. Many of these bullet points kind of align with that in general, right? But we do need to go into a conventional or jumbo, and it does need to go from primary to primary in order to offset the mortgage liability. Really important. Primary to primary in order to offset the liability. We can also go up to 5 acres now. But other than that, this is kind of just boring loan guidelines that Marissa does a great job of kind of weeding through before we get to this stage.
Yes, we want to make sure that, before you're out looking and submitting offers, that not only are you qualified for your first mortgage, but you got to realize there's two loans you're qualifying for. It's this one, the equity portion, which is nothing. They really hardly require anything from us to qualify for this. This is simply based on the value of your home most of the time and the information that I give to them. I've been doing this for 20 years, so I know how to qualify a client. So we're good there. No issues yet. All right, what's
That's the
next?
first thing a loan officer does, or what Marissa does, is say, here's your file. This looks great. You'd be a perfect candidate for this program. I mean, it's like, for some people, it's like the back of their hand, and Marissa's in that
Right.
category as well. So here's a sample program agreement. We want to tell your clients everything they should know up front. This is what they receive when they go through that approval process, and hopefully within 24 hours, we can get this to them. As you can see, we break down the program fee, 2.4%. We also break down the equity unlock amount. Again, that is our 0% bridge loan we're telling your client they can get access to. We break down the loan payoff value, which is our backup offer on the property. As I mentioned, and I would like to emphasize this, it's a backup offer. I'm not going to say it again. Maybe I will. It removes the contingency and offsets the liability, right? That's all it does. And hopefully we never have to use it. But in this scenario, it really represents a home that's probably worth 800 or 900K. And we know that. We don't want to buy your home for 663, but it's just the backup offer designed to remove the contingency, offset the liability. And if we have to, we'll purchase the home at the end of that 90-day program period. But we do have the upside protection. So for clients, it's really important to note all the details of this doc. The loan payoff value is simply the current mortgage and the equity unlock amount, right? You have 90 days to go under contract from the time you close on your new mortgage, or from the time you move into your new home, rather, however you want to put it. And then we say, look, if we have to buy this home, here's the upside protection directly in the front of the contract. The best part about this document is your clients don't need to use us, right? So if they decide to like the program and they like it so much, they sign it day one and they get access to these funds. They go close it, they go buy a new home, they go under contract. But something happens that says they don't need to use our program. Let's say they magically sell their home a week from tomorrow and they don't need to use our program. Even though they signed this contract, we don't charge them the 2.4%. If they do not need our product, we will not charge your client the 2.4%. We simply just need to know before we wire the money, and we don't wire it until 3 or 4 days before they close on their new mortgage. So really important to note, this is the program agreement we signed to your customers within that 24-hour time frame, hopefully, or we signed to you as well, the agent and the LO, Marissa, and the client. Transparency and accountability is everything for us. If we didn't disclose these documents, or if we didn't disclose these program guidelines, we would simply not be in business anymore. So it's really important us to tell your customers the truth up front, show them everything they need to know, and then just let the clients make the decision. Because that's all we can do on our side, but we're happy to help. Here's just a batch before we get into a Q&A and kind of break off of common questions that I like to answer, just to reemphasize. What does the program cost? The program cost is 2.4% of the sale of the departing residence whenever it sells. We don't ask for that money up front. It just works as a real estate transaction fee, similar to an agent fee or a listing fee or a buyer's fee or agent closing fee or listed. It's a long day now. But it works as a real estate transaction fee once you sell your home. We don't ask for it up front. We ask for it once you sell your home.
Paid through escrow at closing.
At the close of escrow. Yep. Yeah. How does the equity unlock work? So the equity unlock's at 0% bridge loan, right? We get you approved for it. You go into contract on your new home, and we wire it directly to the title company to help you with your down payment. And this is something Marissa and I were talking about earlier. We love this kind of cheat sheet. Let's say you have $100,000 equity unlock. You get the access to that at 0%. But Marissa, the smart loan officer she is, says, well, you only need 75K to get into the mortgage that you're looking for. Let's say you only need 75K to put the 20% down, hypothetically. So there's that extra 25K, because we're providing it via the 0% bridge loan. You can opt to use that or opt to take it as an overage directly from the escrow account to help with however you see fit. This is your money. So you can either opt to take it or opt to just take the 75 or opt to take it and take the overage from escrow. So in that scenario, you'd have an extra 25K to use however you see fit, whether it's closing costs or whether it's moving costs or whether it's paying off mortgage payments for the next 2 months, as Marissa mentioned earlier, right?
Right.
Or
Yeah, it's
whether it's
all
buying a
about the
boat.
strategic planning, right, Sam? So it's all about the strategic planning. So, you might find that home and every scenario is going to be different. So before we finalize your loan amount for the home that you're purchasing, we want to make sure. So say we close escrow in August. You're not going to have a September payment, right? Your first payment is due in October. So we want to make sure that we are strategically planning to not break your bank on your new purchase, that if there are repairs or renovations that you're going to need to the property, we have money set aside, that there's more. You still, if you have a mortgage still on the home of your departing residence, you're still going to have a mortgage payment. So we can utilize that money to set aside for you to make sure we have enough to make your payments so that you're not making 2 mortgage payments, right? And it's awesome. It's very easy and strategically planned out to do so because we have the recast feature. So when your house sells, we're going to be able to take that and recast your loan and pay down your balance more to update your payments, update your loan amount, that sort of thing. So we have to strategically plan out based on the home that you're purchasing, are repairs needed? What are your moving costs? And that's something we want to do and budget together so that we can utilize these equity unlock portion of funds to be able to pay and strategically utilize that for your new purchase as well.
Yeah, it's such an important feature, right? And we have many clients, and I like that you hinted on this, fix up the bathroom of their new house or fix up the kitchen of their new house just using the equity unlock. It's really cool stuff. It's pretty unique, right? It's pretty rare you get access to a 0% loan of any kind. And sure, there is a
Right.
fee to the product, but to get access to that as soon as you move into their new home is really cool. How do you determine the 90-day backup? So that's our backup offer that we've talked about. Again, it's really just based off how much is left in the mortgage and then the equity unlock amount you take. So it's really just based on the liens of the property, the liens on your current residence that you're selling. That's how we determine it. It's pretty straightforward. And then we also kind of just use the agent valuation realistically to determine what number we can actually get up to. Obviously, we have a valuations team in-house as well, make sure everything's accurate, make sure the home's going to sell. But hopefully, and I've never had to use the backup offer, but we have had one in the past. So we'll see how it goes. Maybe we'll keep that streak alive.
Yeah.
What
And
if
that's why we limit it, the LTV, 75 to 80% or 75 to 80%, right, Sam? So that there's room for movement with that extra 20 to 25% equity in case, it's not selling or you need to do a price reduction or whatever that may be for an agent, right? Because a lot of the time agents will list high. It depends on the market that we're in, and if they need to do a price reduction, there's enough funds in there to be able to do that should it need to be done.
Mhm, mhm. And so kind of following that up, what if HomeLight has to purchase the home and sell it? The client receives the excess funds and the agent stays on as a listing agent. Really important to know. If we have to purchase the home, we resell it, hopefully at full market value, and then the client receives the excess funds.
Right.
What if my home is already listed? Even better, just makes things easier. There's pictures online, really straightforward. It makes the approval process just a little bit easier because the agent doesn't have to go take pictures of the property. But we
Yeah.
have 50% of our customers who are already listed, and then the other 50% wait till day 9 or day 10 after they close on their new mortgage. It's just a personal preference either way.
And not having it listed, I mean, I had a turn time of 4 hours that you guys did a pre-approval for me, and I was able to get same day pre-approval out for my client to submit an offer. So, I mean, we can work fast on this. It's really great.
The guys work fast. I'm not gonna lie. We have a small but mighty team.
Yeah.
Yeah.
Yes.
I think this is the last slide, really. But if you need something, Marissa is here. If Marissa can't answer it, she will forward it to me. I can guarantee that. We will be happy to help you answer as many questions as fast as possible, or meet with whoever you'd like to meet with.
Do
So
you
she put her.
have questions? Drop your questions in the chat, you guys, so that we can answer them. Any questions that you have.
Yeah, I'd love to do a Q&A. Feel free to either raise your hand, drop it in the chat. If you have a question, other people have questions. I guarantee it. So don't be shy. Whether you're a client or an agent, we're happy to help. Now's a great time to ask away.
Yeah, absolutely. I've had some really good questions on this program. I know I tried to cover majority of what people have asked. So it's great though. I'm really, really excited. Oh, Terry's jumping in to see what we got here, to see what questions you guys have for us. Yes, it's a great program. Really
Thanks,
great
Terry.
program.
Go ahead, Linda. I think I can unmute you.
JC, can you unmute Linda so she can ask?
There, I just did it, I think. Can you hear me?
Yeah, hi.
Okay, hi. Do you have a, do you charge a rent back fee
No.
for while the house is on the market? No? Okay, great.
No rent back fee, no fees at all when it comes to selling that property, just that 2.4% at closing. Whatever you do with it, you do with it, right? You're just going to have the opportunity to be able to purchase before you actually sell that, so that you can move in and kind of have that transition. So that's one of the reasons why I love to plan all of that out when it comes to what we do with that home equity line of credit funds, so that there's reserves left over for whatever you might need it, because every situation is unique, right?
Yeah, something else?
Yes, please.
Okay. Now, you're saying a home equity line of credit, and you're also saying a bridge loan.
Right.
Aren't those two different things?
Yeah, technically, two different things. I typically use bridge loan in the majority of states I present in, but in Texas, I have to do an official HELOC. So I do use both terms. Sorry, I do use both terms. It's really just a hard money bridge loan.
Yeah. Okay. All right. Okay. Thank you.
Good question. What you got for us, Andrelli? Well, hold on. She's got to unmute you. I see you're in the car driving. Hey, sister. What's up?
Okay.
What you got going for us?
Yeah, my question, I'm not sure if it's been answered already when I stepped out or what. But anyway, they say like the departing home can be sold in 4 to 5 months. So does that mean that they have 2 mortgages?
Yes.
Like if we close on the new loan, they'll have 2 mortgages then?
Yes, they have to. So we're not messing with the first mortgage of the departing residents. That if they have a mortgage, they have a mortgage, but they have the equity unlock portion that when I do my pre-approval, right? I am pre-approving them based off the amount that Sam and his team say, okay, Marissa, this is the amount of equity that we can give. Right. So I will take that and I structure and I strategize the qualification for their new purchase, and then whatever they may need. Now it's up for you, the agent, to say, hey, Marissa, this is what the property needs. Like, for instance, I'm doing one with Diego right now. And Diego says, Marissa, I'm going to fix up this property. We're going to renovate it. It's, going to take me about 30 days to do it. So realistically, I'm going to have this sold at right around, 65, 70 days. you know, he's investor stuff, so he knows what he's doing there. So it really allows us the opportunity to say, hey, okay, this is what your agent's thinking on top of it. I'm going to help promote it. So our time frame is going to be about 60 days. We need to plan for 1 month of 2 mortgage payments, or let's go ahead and pad it for 2 just in case it gives you that little extra, right? We want to make sure there's enough funds to cover everything, but we also have to remember when we close escrow on their new purchase, we're skipping a month payments, and there is no payment on that home equity line of credit, right? They're paying that is just money sitting there, 0% interest until that house sells.
Okay. All right.
Okay. So we make sure that we're covering the payments if they need it. Sometimes they don't. They're like, okay, because they're just putting some down, and then they're able to bridge the gap with the rest.
Yeah, so technically, while we do offset the mortgage liability, the client is still responsible for paying both mortgages throughout the period, right? Just
Right.
like any other home sale and purchase would look like. We don't cover the monthly payments during that time, but as we mentioned earlier, you can take an overage on the equity unlock amount to help with that amount, which many customers opt to do. And hopefully it doesn't take the full 90 days to sell, and you don't overlap too much.
Yeah.
Okay.
I
All right,
see
got
a
it.
really thanks. Good question, Andrelli. Okay, I see a really good question. Eli, thank you. I'm considering getting a loan for land and a new build. My question is, would this type of loan fit that program? So we have to understand that there's 2 different types of transactions happening, right? There's your new home purchase. So in your case would be a land build loan. And then we have on the other spectrum, HomeLight's home equity line. Okay. Their portion is, you know, you're looking, Eli, on how do I get that money to put down on my current home, right? The answer to that for me would be, I haven't had that, is I have to be able to close your loan on a construction loan within a certain amount of time, right? So yes and no. I have to have an investor that is willing. HomeLight's portion, yeah, they can. It doesn't matter. As long as you sell that home, you're done with that portion. But I have to be able to close your loan. So that's where the main thing is going to come in. So can we qualify you on a construction loan? Absolutely. Will you sell that home before we're closed on that construction loan? That's the real question, because construction loans can take, 60 to 90 days to close escrow. There are a lot of things to do on a construction loan, especially if you're doing a land acquisition. So I'd love to talk to you a little bit more about that one-on-one, because I do construction loans, but I also have to have a lender that would be willing to do construction with the HomeLight program, which I do have a couple that do allow for construction already.
Yeah, for us, it's just a time constraint. We can purchase any home, right? And we can work with any home, but we do have timelines, and we don't lend our money out for too long. And so, while it is an option, it would have to be extremely efficient, as kind of Marissa was hinting at.
Yeah. No, Eli, let's definitely talk about it, because it is a possibility. It's all about strategically planning it out, though. We can definitely make something work. For them, it's because here's the thing. When you close, as long as you're trying to sell that home, that's great. Like, we can do it all day long. When you sell that home, that's awesome. If you sell that home before we close escrow on your construction, then guess what? Then that's fine. On a construction loan, you're going to do a 60 to 90 day close anyway. So you're probably going to have that home sold. And if that home sold, good. We're good. So, Linda, good question. Who pays for the inspection and appraisal upon going under contract? So going under contract on your new purchase, I'm assuming, right? That's a regular loan transaction. So the buyer pays for their appraisal and own inspections. So a lot of the time it's very easy on this program to get it confused, thinking that it's one. The client is coming to me to qualify for a purchase transaction to buy a home. And I am submitting documentation for the client through HomeLight so that they qualify for a home equity line to sell their departing residents to utilize for this. So I am essentially, if they don't have funds to close, I'm going and finding the funds to close from their departing residents to put down on their new purchase. And that's how I'm qualifying it. So you as the agent, if you're listing that house, all you have to do is worry about selling it. That's it. If you, the agent, are representing the buyer also to buy a home, all you got to do is worry about finding them a new house. I'm taking care of everything else. They don't need to do anything different when they're selling their house. Nothing different. You're going to go through your regular inspections and all of that. You're not going to do an appraisal on that house. You're not doing anything extra on the house you're selling. And you're going to represent client for the client on the purchase transaction. They're going to go through just like it would be a regular purchase. Inspections are needed though on the departing residents, but you get a home inspection typically anyways, right? So Sam, you want to fill in on that?
Yeah, so we do require an inspection, but once your client goes under contract, we essentially send an inspector to the house. We pay for it up front, but it would come out of the transaction fee as well once your client sells the home. But we do pay for it up front.
That's good. So it's not something the client has to pay for up front. Okay.
I just wanted to make sure that was clear for Linda.
Yeah, thanks.
Perfect. Perfect. Okay. And then is a lien placed on the departing property?
Yes, absolutely. Great question, Linda. That's how we get paid back on the bridge loan itself. So we put a second lien on the property, and then once the home sells, that's how we guarantee that we get paid back from title once the property sells.
Good question. We got some more coming in. I'm loving these questions, you guys.
There are recording and title fees associated with the lien. They typically end up being somewhere between, depending on the state and the area, total somewhere between $300 and $400. Recording fees around $250, and then title fees around $150, somewhere around there. But there are fees associated with the second lien that don't get paid off until that 2.4% payoff at the close.
So everything is still done at close of escrow when you when you sell it for full price. It's not even though it is two separate transactions, you're not doing it as two separate transactions.
Correct. Fees on top of the 2.4. Yep.
Yes. So when they go to sell their home, and Sam, this is a good question. Maybe I have this one too. So when they go to sell their home, say they're the title and escrow fees for the new buyer are what's it called? Is this something the seller's paying for, or is it done between, how they write the contract for, 50-50 title and escrow? How can we plan for that?
This would be on the seller because the buyer had nothing to do with this second lien. It would essentially just work as lien fees or title and escrow fees on top of the lien itself.
Okay.
Unfortunately, I don't have a firm number because they do change state to state and title to
change.
title company, but it is on top of the 2.4%. And it's not going to us, it is going to the title company itself.
Okay. And that is only if we have to do the actual purchase and there's a change in ownership, right? So, right.
Actually,
Yeah.
it's on the second lien itself.
Yeah. Yeah. On the second lien. Okay. Okay. I get it.
Yeah.
Cool. So we can get all that information from a title company as soon as we know the equity position amount. That's when you're going to open escrow, we already know what the equity unlock amount's going to be. So we just need to inform title, hey, this is what we have on it, right? So what is the cost for this so that it's disclosed properly?
Yeah, we tell
that's
the
something us the lender will
client
do.
that when we disclose those numbers once they're under contract.
Okay. Okay, because they do, HomeLight does a contract that is sent to the client and they do disclose all this information on there.
Yes, we have to provide disclosures, obviously.
Yes, just like a regular transaction, even though it's more like a hard money. Yes, any real estate agent can be used. This is not a, not any lender can be used. but any real estate agent can be used. You guys have nothing to do with the loan transaction. More questions? Okay, we'll take this as our last question that's coming through right now. And then if you have anything else, give me a call and we'll talk. What if only...
No, it's a great question. So if we could just provide a bridge loan, I wish it would be a great product, but our model is essentially like, since we're putting in the backup offer, we essentially know when the home is going to be sold. Unfortunately, we don't have a third-party bridge loan program. Marissa, do you have another bridge loan?
We have a ton of bridge loans, but why utilize a bridge loan? And the reason why I say that is because typically you're qualifying for both payments, right? You're not going to qualify for very much. You're utilizing HomeLight's program. What I love most about it is I qualify for 2 loans. It's 0% interest, so I'm going to pay interest, right? And I'm able to take that and qualify for the client for much more. And this is the only program that I have ever in my life heard of that I'm able to write a recast those funds to the client. Normally that doesn't happen. That's not something that, you know, every lender will allow or do. So being that this is the type of program, you know, we have to be approved specifically to do something like this with this program, right? And trained how to specifically allow for it on certain product types. So it's not, you know, utilizing a bridge loan is great, but honestly, majority of the clients that I qualify have to qualify with that mortgage payment of both the first mortgage payment and the second. They end up hardly qualifying unless they make a ton of money, right? And there's several bridge products available, but HomeLight's portion is the absolute best program for this specifically. Good question. Okay, you guys. Well, thank you, Sam. I had a blast hanging out with you today a couple times. And thank you for coming and supplying so much knowledge for my agents and my clients. If you guys have any questions, please, please, please reach out to me. If you're an agent and you want additional training on this, please reach out to me. I'm willing to even come to your guys' office to go, you know, to do this extensively for sure. And I'm sure Sam would love to join me. That'd be great. I'm going to send you a flip book. That is your present today for joining my webinar. And look out for next month. We're going to be hosting another webinar, but I have spent so much time on this one. I haven't decided exactly which one I want to throw out to you guys yet. So look for that. Sam, thank you so much. Thank you all for joining and have a super blessed, amazing day.
Thank you, Marissa. Thank you, everybody else as well.